Welcome to our High Rock monthly video for October. I am Scott Tomlinson, and with me on the call today is portfolio manager Paul Tepsich, who founded High Rock in 2010. We started our private client wealth management division in 2015, and we are coming up to our 10-year anniversary. If you are interested in learning more about us, please visit our website at www.highrockcapital.ca. All right, September came and went by rather quickly, Paul. For the most part, all asset classes were either flat or slightly positive. Not a lot of volatility in September, as we usually see, but it was a good month. It continued to be a good month for balanced portfolios. On the year, the story is basically a strong year to date as we finish the third quarter of 2024. I don't know if you've got anything particularly you want to add, but equity markets and bond markets continue to perform enough to give balanced portfolios a pretty decent year so far.
Well, it's been a great year, but I think as you mentioned all that, Scott, we should just knock on wood. We've got 3 months left to go, so it's been good. The standout, obviously, from this chart and for the month of September is gold and silver, which everybody can see, and a lot of that came even the back half of September as the Fed cut interest rates by 50 basis points, and that led to a bit of an expectation that they might ease faster than people had thought, and that might lead to inflation. So with that, gold and silver and some other commodities as well had done better.
And it's certainly been okay for the equity markets and all in, good for balanced portfolios. And as our clients, for the most part, have balanced mandates, we can compare your portfolios against the Morningstar averages, which have over 1,000 balanced funds. Most will find that over the most volatile 3 years since 2008, High Rock performances have been better, with the mitigation of the downside in 2022, which was fairly significant. But as is always the case, if you wish to discuss your particular portfolio in detail, please get in touch. Paul, let's briefly share if you have anything to share about our high yield and preferred share mandates.
Yeah, sure. The preferred shares, first of all, Scott, they, as we saw in the previous chart, not a ton went on in those across the month. It was a reasonably static or stable month. I would add that just in the first couple days of October, a BMO preferred share W was announced, it's coming up for a redemption or extension in November, and they announced they would indeed redeem it, which is, I wouldn't say it was a surprise. That's certainly the plan we had. Now, we own that pref in both of our high yield mandates, pref mandates, and in our balance mandates in pretty good size. So that was a very welcome outcome. But after TD Bank back in September decided not to redeem a pref, that sort of sent the pref market a little bit lower. So we recovered and look forward to, we really only have now one bank pref left, both in our balanced mandates and our pref mandate. High yield was much the same, just steady as she goes sort of month. Nothing new. There were no new issues and no real activity.
Excellent. Okay, and just to remind everybody that we are always focused on your long-term goals, so it's important for us to have regular reviews in order to make sure that we're focusing on those goals and that your strategy for investing takes all of those goals into consideration. Let's talk a little bit about our global equity strategy. Our global equity model contains a number of equity ETFs, all of which have performed well this year, some better than others. US equity ETFs have been the best performers, but we've also had good performance from our emerging economy ETFs, and a lot of that has to do with some bounce back in markets in China. Again, we are always happy to discuss individually your particular exposure to the global equity model in your asset allocation strategy and as part of your investment policy. So please feel free at any time to get in touch to have a conversation around your strategy specifically. We are always talking about when we like to rebalance portfolios. When portfolios get overweight, usually that is a sign of their outperformance. And what we do when we rebalance is we will sell the assets back to their original weight. When we take that cash and we look for assets that currently are sitting underweight, which means they've probably been lower in value, and that rebalancing tends to be fruitful as different financial assets align over time. Something that we are watching closely is the upcoming US election. Currently, we know that historically September and October are potentially more volatile months for markets. September actually has been less volatile than usual. But as we approach the US election, and given that the US election at the moment looks extremely close, the outcome for financial markets could be very much influenced by what happens, not just the results of the election, but how the aftermath of the election is perceived. So I don't know, Paul, if you have anything you want to add about your thoughts here, but this is something that we are keeping a close eye on, of course.
Yeah, and I have nothing to add.
Excellent. Okay, so over to you then, and if you would like to talk about our tactical strategy.
Yeah, tactical, just a couple notes. We added near the end of September, added a small amount to our position in Source Energy stock. Just as a reminder, that's when we held the bond for about 2.5 years, sold it, and moved into the stock. The prospects, economic prospects for the company have improved so dramatically. I've got way better visibility on this now going forward, so it's easier to model out what I think the company is going to do from a cash flow perspective, and it's trading very cheaply. And we may look, we bought about half of what we wanted. We may look to add a little bit more on some weakness. We also, for some clients who were slightly underweight, we rebalanced a little bit and added some Baytex energy stock as well. So that was just for a subset of clients. Another note, and it's super small, we had have a very small position in TC Energy, the old TransCanada pipeline trap. They spun out a division called South Bow. So you may see in your portfolio a very, very small weight in that. It will be a dividend-paying stock, a dividend-paying company, but it's brand new. It just started trading a couple days ago. That's it for tactical, Scott.
And fixed income.
Fixed income, all I would add, well, a couple things. Government bonds on the month, it didn't actually, they added a bit of value, but over the past few days here, it's been a bit of by the rumor sell the fact with regards to the bank, the U.S. Federal Reserve and possibly even the bank cutting rates more than people thought they would. So rates have gone up over the past week or so now into the second week of October, which is not great. But nonetheless, over the month of September, they did add value. Preferred shares I already talked about. The big news was TD Bank not calling their PF BMO.A surprised the market, but then of course BMO.W was redeemed, and that's very supportive. And all we have left, we're going to hold that one to maturity, Scott. I think it's November 25th will be taken out. So we've got another dividend in there to be paid. So it's trading above par. It's like 25.10 or something, $25.10. We've got one left, one bank pref left. That's commerce.pr.p, and that's for January. I think it's January 31st. And they certainly have enough regulatory capital to call that one. So we'll see. And with rates backing up slightly over the past couple of weeks, that's helpful. High yield performed, as I said, pretty steady as she goes, and investment grade much the same. That's it.
Great. Thanks for that. Well, that's great. A quick one this month. That's good. We'll be back next month, though, with an update, and of course, that will be around election time in the U.S. So there may be some more to talk about with regards to that. But we always, as always, we want to thank you for taking the time out of your busy schedule to tune in. We'll be back with our next update at the beginning of October. Until then, this is Scott Thomason, and on behalf of my colleagues Paul and Diane, we wish you all the very best for the month of October.